Everyone, welcome to Powerful Trade. Today we are going to look at Nifty's weekly expiry that is falling on 23rd January 2025. So we will go with as usual pointer. So first we will look at the price action, that is our first pointer. So we will look into the graph. So if you look at our graph, that is a chart of Nifty. So like we can see what happened last week. So the support zone market was trading most of the time in the support zone, and then expiry also, as we expected, it got expired. So now we will look into the this week what all the possibilities and what we can see into this. Actually, if you see that support is like market is not able to break the support, that is what we could see in the last week price action. And the second thing, the resistance remains same, support also remains same for this week also. So now the possibilities what we can have is the support if it is retained. So market cannot be sideways for the second week. So if you see this week, it was completely on the sideways. So the next week, if support is retained, then we should move towards resistance zone. So that is what we are expecting, and we expect the support to be retained for this week also. So we will look into the Nifty chart in a different time frame. So we will see in weekly time frame. So if you look at the Nifty in weekly time frame, actually what we are seeing here is, if you look at the Nifty in weekly time frame, there is a perfect doji formation last week. So where we started and then where we closed is actually slightly above. So this is the doji at bottom. So we are looking as per this chart. So we should be making bottom in this week, and then we should move upward. That is what we are expecting. So this is the doji formation. So which means the sellers are not active in this area. That is what it is showing in this chart. So we will now next look into the next pointer, that is India VIX. So if you look at the India VIX, actually last few days, actually we can find India VIX is actually continuously it is moving up. So if you see India VIX is continuously moving up from the year 2025 year started. After that it was slightly moving up because the budget is coming on 1st February. So automatically VIX is supposed to go up only. So that is what we are expecting. The VIX is also going up because we have not moved major in the Nifty, but VIX is moving up due to the event which is coming up. Okay, so then we will look at the second data, that is option OA data. Generally, we used to see option OA data to decide like our direction. So now what is showing option OA data, will let us look into the option OA data. So if you see the option OA data, the highest put rating seen in 22,700. After that 23 also we can see some put rating is there. Then lot of people are expecting actually 23,200 once again there is a short strategy. But we don't expect the market to be sideways once again near 23,200 because last week also we have traded in this zone only. So we should not be in this zone. But as per the OI data, they are only made it 23,200 only. The shadows are observed, and the highest OA we are finding at 23,500 call also. Then the highest OA is there on call side is 24. So we could clearly see one is short shadow and 22,700 some shorts means put writers are there. Then after that 23,500 and 24 is having the highest. So even if it is going higher side with the because of short covering or something, the 24 is having the highest call rating. Okay. So now next pointer what we are looking is Shadle premium. So what exactly happened on the like if you see on the Friday, the premium has shooted up to the day high of 400. So, which shows that this week is having a major move. See, generally we find the shadow going one-ended, going down from the beginning of the week, but this time it has gone up to 400 above. So, which indicates more volatility and more range. So, that is what we could see in this saddle premium. So, next pointer we will look into the next pointer, that is institution future position. So how institutions are keeping their position. So if you see FII actually, you see they have gone to the highest number of short, that is about more than 3.26 lakhs. So 3.26 lakhs short position has been created by FII. So now what we can see is any move beyond 500 once we crash, so there is a high chance of short covering. So that is what we are finding. So any day, if we sustain higher level, immediately they will be start covering all the shorts. So that is what we are looking at time being. So because the point here is because this is the highest number of short they are holding, and now the only thing is now the consolidation zone has to break. So if you look at the chart, the first resistance is there somewhere around 500. Okay, this is what last week we are started falling 500 range. Once we go and sustain, so there is a high chance of going for a FA short covering. So that is what we could see here. And if you look at the other thing, like we will look at DA. DA is in actually, if you look at DA is in long and FA is in short. So this is the perfect place where we can make a bottom, short term bottom. That is what we could see here. And the like FA short also about 85 percentage right now. Okay. So we will look at the next pointer, that is global market. So if you look at the global market, so what is going on in the global market? So if you see the Dow zone, so the Dow zone was also falling continuously. So last 2 3 days it is also moving upward, but we are not moving anywhere. So that is what there is no panic around in the global also. So global also stable, and in fact Europe markets are hitting new all-time high in last 2 days. So that is also a good sign for us to recover from the this level. And so next we will look at what is the conclusion and trading ideas. So we will look at the data. So come back to the once again to our Nifty chart. So like if you look at the Nifty chart, we have already told that resistance zone is remain same. It is about 23,700 or 750 level to 24,000 is a resistance zone. And now we want to look at the target also. Now what target we can go for this week. So what we are expecting is, see if you look at the, if we sustain the yesterday low, see basically what we have to do is yesterday low was made somewhere around 100. So we should not close below 2300. So that is one of the requirement for this week. So even if you go down on the intraday basis, we should come above 2300. That is very much required for our market. Once these levels are sustained, we cannot continue to be in the sideways market. So we expect market should move up from this place to the resistance zone, and this move, once we are telling beyond 500, there is a huge short covering possible. So that is why we are expecting the target zone maybe somewhere around 23,700 to 24,000. So this is the zone we are expecting we can go up in this week. And one more event is also there, that Trump is taking oath ceremony on Monday. So that may also give some sentimentally bullish side for all the market. So that is what we are expecting for this week. So you can plan your trade according to our weave, and then you can follow a proper risk management such that it will be good for anyone. And the support is also mentioned, resistance mentioned, and then we have given the target zone also. So These all informations are given only for the educational purpose. So please trade at your own risk, and then this is only for the way we analyze the Nifty, and then we are giving you the that educational purpose, all the analysis how we are going through for each and every week we are submitting in front of you for your understanding and reference. So thank you very much for watching. Thank you one and all. Happy trading. Have a good day. Thank you.